Imagine you're standing on the edge of a vast, still lake. The water looks peaceful, reflecting a clear sky, not a ripple in sight. But far below the surface, the earth is shifting, cracks forming, currents pulling in ways you can't see. That's the crypto market right now, especially for XRP. It trades quietly, around $2, lulling everyone into a false sense of endless time. People scroll charts, debate prices like $10 or $50 or $100, and think they've got it all figured out. But if you don't grab 2,500 XRP before 2026 hits, this calm might be the last you'll ever know for this asset. No hype here, no wild dreams. Just cold, hard math on supply, the quiet moves of big institutions, and mechanics most folks overlook completely. Let me take you back a bit, like we're unraveling a mystery together. In crypto, everyone loves yelling about numbers on a screen. Up, down, moonshots, they argue endlessly. But almost no one stops to ask the real question. Why do prices actually move when they do? What's brewing around XRP isn't some fluffy bull run story you hear from influencers. It's more like a supply apocalypse, where the tokens available for everyday traders just dry up. Liquidity stops acting like a playground for retail buyers. It turns into something institutions control, off the public radar. Picture this scene. XRP sits at $2. Folks lean back, sip their coffee, and say, "Plenty of time. Institutions aren't in yet." That thinking is a trap, a dangerous one. Big players, pension funds, banks, asset managers, don't chase flashing green candles like excited day traders. They slip in quietly, building massive positions in the shadows, layer by layer, without a whisper on exchanges. No drama, no FOMO posts, just steady accumulation. Instead of guessing at fairy tales, let's root this in something real we've already watched unfold. Remember Bitcoin ETFs? In their first 2 years, they sucked up about $125 billion in assets. To play it safe, cut that number in half. $62.5 billion in year one alone. That's not fantasy, it's history, a solid benchmark we can build on. Now let's paint a realistic picture, nothing outlandish. Say 20 XRP ETFs launch around the world. Not pie in the sky, that's conservative, considering the US, Europe, Asia, and all those index funds tagging along. Keep XRP's price flat at $2, super cautious. If each of those funds chases that same year one Bitcoin benchmark, we're talking just over $3 billion per ETF every year. Break it down slow. $260 million a month per fund. That's $65 million a week. Roughly $13 million a day pouring into XRP per ETF. At today's prices, that means millions of XRP tokens vanishing from circulation daily for each fund. And this happens quietly, methodically, without a single trade hitting the public order books. OTC desks, private deals, dark pools, they handle it all. Now multiply across 20 funds. The numbers don't just climb, they explode. We're not chatting price guesses anymore. This is supply vanishing into thin air. Even with these tame assumptions, ETF demand alone starts eating up the entire liquid supply open to the public. That's the structural break I mentioned at the start, like the lake bottom cracking wide open. This is why 2026 won't play like past cycles. Forget comparing it to 2017's retail frenzy or 2021's meme madness. Those were sentiment-driven parties. XRP is morphing from a trader's toy into the backbone of institutional systems. Once that switch flips, price doesn't dance to Twitter moods or Reddit hype. It answers to raw scarcity, tokens that just aren't there anymore. And this isn't happening in isolation. Look around. Governments are rewriting their scripts. Regulators swap contain the threat for integrate and grow. Political leaders stop whispering about crypto risks and start calling it a strategic powerhouse, a creator of jobs, a shield for the dollar, a lead we can't let rivals snatch. That's not empty talk. It's a green light for capital floods. The market hasn't baked this in yet, not because it's fake, but because it's sluggish. Retail traders wait for headlines screaming, "Buy now, institutions." They position months ahead while everyone else debates. That gap between seeing the signs and acting is where fortunes form or fade. So when I say 2,500 XRP, don't picture a lottery ticket or some guru's magic spell. See it as a threshold, a line in the sand. On one side, you're in a fluid retail game. On the other, you're holding something institutions are methodically pulling from circulation. This isn't scare tactics or pump speech. It's straight math, unfolding like clockwork. But let's widen the lens, because ETF flows are just the opening act in this bigger story. What really ignites the fire is who's stepping up to vouch for crypto, and why their nod carries weight. For the first time, this space isn't painted as a casino sideshow. It's a cornerstone industry, vital to the future. Think about a sitting US president spotlighting Bitcoin and crypto. It eases pressure on the dollar, sparks jobs nationwide, and demands we dominate before others do. Campaign chatter? Hardly. That's policy in motion, the kind markets sniff out early. Once regulators pivot from shut it down to scale it smart, money moves like a river breaking a dam. Pension funds, retirement bosses, corporate cash keepers, they quit asking, should we touch crypto, and start grilling, how do we explain skipping it? Flows aren't optional anymore. They're table stakes, mandatory for staying competitive. Tie this back to XRP, because not every crypto rides this wave the same. When rules call the shots, winners have clean histories, deep business roots, and real-world muscle for settlements. XRP doesn't scrap with meme coins for attention. It takes on rusty payment highways, creaky bank-to-bank links, and settlement tech frozen since the fax machine era. ETFs are cool, but the monster is retirement money storming in. Pressure's building to let 401ks and similar pots dip into digital assets. Americans alone park $9 trillion there. A measly 1% or 2% allocation. That buries most crypto markets in fresh demand. Pause and really see it. XRP's truly liquid supply, the stuff you can actually trade, is a drop compared to that ocean of retirement cash. If even a sliver flows via ETFs, indexes, or pro portfolios, the demand hit isn't a gentle wave. It's a tsunami, smashing charts without mercy. Technical traders stare at their indicators, scratching heads, because this doesn't follow old rules. Here's where confusion creeps in like fog. People think buying pressure always lights up public exchanges, big green volume bars for all to cheer. Nope. Institutions shop differently. Over-the-counter desks, secret liquidity pacts, structured halls that never touch the visible books. Price can flatline for months while supply drains backstage. It's not open to close fireworks that nudge candles. Its availability shrinking until even tiny public sells trigger savage spikes. That's the "it came from nowhere" moment everyone gripes about, except the setup simmered for ages. Layer on what top banks are confessing. Execs from the world's biggest money machines admit shifting trillions daily over blockchains. Not lab experiments. No one tests at trillion scale. That's live production, the real infrastructure humming. And optimization kicks in fast. Sleeker, quicker, cheaper settlements. Enter XRP's sweet spot. It wasn't built as a shiny store of value tale or viral meme. It's a seamless bridge, stripping friction from clashing systems. The more pipes connect, the pricier that bridge gets. Utility pulling the strings, no matter retail's daily drama. Supply screams louder now than ever. ETFs vault tokens away, custodians lock them tight. DeFi wrappers bundle them up, corporate treasuries hoard them, payment streams demand them. None of those XRP pieces lounge on exchanges at $2, waiting for your bid when panic buying hits. So flip the script on why 2,500. The true puzzle, how many can you stack before XRP ditches the retail sandbox for institutional pipes? Once embedded, price doesn't stroll up gently. It gaps, reprices, vaults to spots that seem nuts if you're stuck in yesterday's market map. Zoom tighter on the XRP scene, where most miss the plot entirely. They dream of a banner headline, "Banks Pile In," and instant moon. That's not how giants transition assets. By headline time, smart money's already feasted. We're in the stealth handover now. Supply siphoned without sirens or spotlights. Retail dozes through it. Every asset's shift from wild speculation to core strategy follows this beat. Disbelief, nothing's happening. Confusion, why so flat? Then shock repricing that stings the late crowd. Liquidity's the real pinch point. XRP doesn't need every bank flipping switches tomorrow. A few whales create unfixable squeezes. Sure, circulating supply looks huge on paper, but carve out hodlers, custody vaults, ETF stacks, treasury piles, DeFi pledges, enterprise flows. What's left for trading? A sliver, thinner than you think. That's the extinction event, heart. Not XRP gone, but tradable scraps evaporated. Price quits playing nice. Markets don't haggle with voids. They price around them, hard and fast. Weave in time's roll. ETFs don't binge, they sip steady. Retirements rebalance on schedules, quarterly ticks. Core stack patient, no rush. It grinds dull until boom. 2026 shines because lanes converge. ETFs hoover, retirements press, banks settle on chain. Payments plug crypto rails. Regulators wave through. No influencers needed. Utility breeds must-buy demand. Fixed supply meets that. Not soft climbs. Sharp steps up. Memes flip it. Story first. Use maybe later. XRP inverts. Use lands. Story trails. Slower spark, but unbreakable hold. Low price dragging. Not a bug. A gift. It lets rails build. Partners test. Corridors firm up. Free from bubble pops. Systems ready. Price snaps violent. Wise capital skips candle chases. It loads in yawns when forums bicker, dead or brewing. XRP doesn't hunt bull run trophies. It burrows into unglamorous plumbing. Durable, essential. Dependency jacks removal pain. Use glues in. Volatility bows to steady value. Thus, 2,500 XRP is threshold. Buffer against tightening doors. Smaller stacks? Choices shrink as prices soar. Wait for proof, folks, foot the premium bill. Discipline's king, not blind faith. Know your why, your exit signals, your vol plays up or down. If XRP ignites utility fire, boredom's easy. Euphoria's the beast to tame. What of crunch hitting home? Scarcity sneaks, no alarms, weird wicks, gaps, phantom pumps. Doesn't add up, manipulated. Nah, tight supply chunks moves, not smooth lines. Institutions spawn stairs, long squeezes, then blasts. Rebalances at scale, not FOMO froth. Retail swears $500 hold, few stick. Speed hijacks brains, screenshots anchor over plans. Pullbacks scream top, greens yell sell some. Winners prep success psychology. XRP's utility base, rock solid. ETFs don't dump, retirements ignore rage. Banks shrug tweets. Dips rebound swift, corrections shave shallow, vol tilts skyward. One more dip, waiters find the pull-up ladder gone. Timing siren song flops. Calendars blind, 2025 run, 2026 peak. Institutions eye phases. Regs clear, pilots prove. Scale rolls, sheets integrate. XRP marches that trail, price or no. Headlines confirm, infra sparks. 2,500, exposure reality check. Tiny slices, cap math, wins. Match to goals, life pivot, debasement shield, or exposure lesson. Lockups stack forever. ETFs, DeFi, treasuries, lost keys, hodlers. Demand dips, supply stays buried. Scarcity flips real. No reset, rebase, old ranges, ancient history. Expensive looks bargain later. Victors decide pre-chaos. Why hold, sell triggers, add spots. XRP as infra? Tough isn't buying. It's gripping sans blink amid global wake-up. Close crisp? Edge lies early position, smart grip. Infra beasts creep slow, strike fierce. Memes can't touch. 2,500 nudges, truth. Size shapes, fate. Faith absent stack. sideshow. Raw deal, no free ride. Regs stall, adoption lags, rivals snag, macros freeze. Dodge sure thing sellers. Manage odds, portfolio slot, not all eggs, your win lines, profit tiers, add chances, pre-emotion. Skip chases, panics, thesis scrambles. Humble utility stake in money shift trumps gimmick dashes. Infra crowns patience. 2026 squeeze, early win, stretch, steady rewards wait, twist, safe sizing saves. Serious assets honor serious moves. Final word, no financial advice here. Not buy, sell, hold urging. Crypto's a wild ride. Losses lurk, own your calls. DYOR, risk check, pro chat if wise. Ahead thrive the steady, prepped self-thinkers. No crowd cue needed.